A couple of different themes. One, to start at home, very concerned about the fiscal situation in the United States, right? Everyone knows our deficit's at record historical highs, especially with low unemployment.
And it's different this time around when we were worried. I feel like in the beginning of my career, we constantly talked about the deficit and then it went away.
Exactly. Well, because there's an escape hatch, right, which is called the central bank or the Treasury buys all our debt, which Japan has done and delayed its reckoning, if it's even had a reckoning, for 20 years.
Yeah.
So that's exactly the dichotomy that investors have to face, right? There is this big fiscal deficit, but the bond vigilantes, I don't know if they're on another planet, but they're definitely asleep, right? And treasuries are rallying into this. So I would say, listen, what it means is we're going to be spending less money, regardless. I think we'll have a split government one way or the other. I have no idea how.
Right.
We can't be spending $1 trillion at a clip because we just saw that it resulted in inflation.
So let me push back on that a little bit, because you and I have discussed this in the past, but I want you to defend that. So my whole professional career, I've been hearing warnings about the deficit is going to make it too expensive to service the debt. No one's going to lend to Uncle Sam. The dollar won't be the reserve currency. It'll crowd out private capital. None of these things have happened. And Japan has kind of shown, hey, you could run a debt pretty high level. Their economy still has been doing pretty well. Why is the fiscal situation so dire here, given that we haven't seen any problems?
Look, it's a political, approximation, but I just think spending is going to go down, Barry. So what I say is, if you look at 2022, 2023, 2024, everyone's like waiting for the recession.
Right.
Recession didn't happen. Why? And that's why I say, because government spending was so high.
Right.
So that's really my point. That government spending, unless you get another $1 trillion spending package, which isn't going to happen unless Kamala Harris gets elected and sweeps.
Clean sweep.
Right? If that happens, we'll get more $1 trillion spending bills. But even her party with Larry Summers, I think, is reluctant because of the inflation.
Who? No one listens to him anymore.
Oh, that's true. He's on another planet, too.
He got shunted aside because he was wrong about inflation, wrong about the fiscal spend.
Well, we did get inflation.
Yeah, but he said it was going to be persistent and you would need 10% unemployment to bring it down. It was transitory, and maybe transitory took a little longer than expected. But I want to stay with the idea we didn't have single-party rule. We had a major infrastructure bill go through.
Money's still working its way through.
We had the semiconductor bill go through. We had the Inflation Reduction Act go through. We've had 4 major pieces of legislation that are all 10-year spending plans.
Yeah.
Why can't that happen if we have a split government going forward?
It can.
All right.
It can. Look, we don't know the future, but I'm just saying there's a lot of bills like Trump's taxes are going to expire. There's another debt ceiling fight. So there's just a lot of turbulence. You're right. Maybe it comes out and we just keep on spending like it's 2022.
So let me give you
So that's one scenario. Then the markets continue to rip. Okay.
Wait, let him talk.
Scenario
Let him
one.
talk. Let him talk.
Scenario tip. To less primary case, Jan's primary case, less government spending. So just like things get a little bit more subdued, and I think the 10-year is reflecting that. Weird outside scenario, the bond vigilantes fly back with an Elon Musk vehicle back to Earth, and they go crazy, and the 10-year freaks out. I agree, low probability. Investors just need to keep that in mind. Long story short, okay, if you need that monetary stimulus, what do you want to own? Assets that are still unpopular, I would say future-proof, gold and Bitcoin. Both have hit all-time highs, but I'm surprised being at this conference, I have not run into a lot of Bitcoin or gold bulls.
Couple of crypto places, Grayscale is over there, but
no, it's a different tone, right, than we've seen over the last few years.
So what metrics, so let's assume you're right and I'm wrong. What metrics are you watching to give you some insight that, hey, this scenario is playing out?
Just look at the technicals, right? Again, gold and Bitcoin, all-time highs, nice bull markets.
Stock market all-time highs, though.
Sure. Yeah, but what? Boy, Bitcoin and gold are rallying because of what I talked about, right? The equity market's rallying because we have an AI technology trend in NVIDIA and a couple of companies.
The equal weight S&P actually was hitting all-time highs.
Yeah.
But that's
great.
But that's not just the mega caps.
That's true. Yeah, no, I mean, I'm not bearish U.S. equities.
Yeah.
I'm just saying the way to construct your portfolio is to deal with opportunities, which of course are primarily U.S. equities. But one of the risks on the horizon, which was the original question,
yes,
right, was what I see is fiscal turbulence.
Right.
And I told you how to hedge it.
So you like gold and Bitcoin. What else do you like?
For that, right.
For that reason.
And then I think Barry knows, when I look forward for the next 10 years, India's economy is going to overtake that of continental Europe. And yeah, you can say the companies are expensive, but there are 2 phone companies that effectively have an oligopoly over the access to the internet, and India is digitizing.